You bought Nvidia, you bought Samsung, maybe skhynix. You're telling your friends this is the next internet boom. And honestly, you're not wrong. The AI numbers are insane right now. Big tech companies are announcing hundreds of billions in spending. Chip companies are posting record profits quarter after quarter. Every single headline screams, this is only the beginning. So you hold. Maybe you even add more. But let me ask you one thing. What if the biggest threat to your AI investment right now isn't China, isn't competition, isn't even a market crash? What if it's a transformer? Not the AI model. I mean the literal steel and copper electrical box sitting outside a power substation. Because right now, in 2026, that $130,000 piece of equipment is the reason 60% of planned AI data centers haven't broken ground. And almost nobody in your investing circle is talking about it. Stay with me. By the end of this video, you'll see exactly where the money is moving and where it's getting dangerously stuck. My name is Moon, and I obsess over how money actually moves, not how headlines say it moves. Here's what the headlines are saying right now. Big tech is spending $725 billion on AI infrastructure in 2026 alone. Nvidia is projecting 77% revenue growth. Samsung posted $36 billion in semiconductor profit in a single quarter. Hynix hit a record $35.5 billion in revenue. Everything looks incredible on paper. But here's what the headlines aren't saying: the money is announced, the demand is real, but the infrastructure to actually run this AI, it's physically stuck. If you're holding AI stocks and something feels slightly off, like the hype is loud but your portfolio isn't moving the way it should, this video is for you. Subscribe. And if this changes how you think about your investments, hit like. Where's the money going? Who controls the flow? And where's the real opportunity hiding? Let's follow the money. Most people think the AI trade works like this. AI demand goes up. Nvidia ships GPUs. Samsung ships memory. Stocks go up. You win. Clean logic, makes sense, and it's dangerously incomplete. Here's the actual situation. Sightline Climate tracked 12 gigawatts of U.S. data center capacity announced for 2026. 140 projects. Big ribbon-cutting announcements. How much is actually under construction? 5 gigawatts, less than half. The other 7 gigawatts, billions of dollars of AI infrastructure is completely frozen. No bulldozers, no workers, nothing. And here's what will blow your mind. These projects aren't stuck because of money. They have funding. Not because of chips. Nvidia is shipping. Not even really because of permits. They're stuck because they cannot get electricity. Specifically, a high-voltage electrical transformer. Let me make this real for you with a simple analogy. Imagine you built the most beautiful restaurant in the city. Best chef, best ingredients, fully booked for 6 months. But the gas line to your kitchen isn't connected yet. You can't cook a single dish. That's exactly what's happening to AI data centers right now. Nvidia is shipping the GPU, that's your chef and ingredients, ready to go. But the power grid connection, that's your gas line, isn't there. And the wait for that connection? Before 2020, transformer lead time was around 24 to 30 months. Today, it's up to 5 years. A $1 billion data center held hostage by equipment that costs less than 10% of the total build. One analyst nailed it perfectly. Electrical equipment is under 10% of total data center cost, and 100% of the bottleneck. This isn't a supply chain hiccup. This is a structural crisis hiding behind record earnings headlines. Now here's where it gets dangerous for your money. Markets are still pricing AI like everything is perfectly on track. And the current earnings, they look incredible, genuinely. But watch this mechanism carefully. A hyperscalers say Microsoft plans to install 10,000 Nvidia GPUs in a new data center. But the data center is delayed 18 months because they can't get the transformers. Do they keep ordering GPU to sit in a warehouse? No, they delay the order. When the order is delayed, Nvidia's revenue growth rate slows. When growth slows, even slightly, the market doesn't say, oh, that's just a temporary infrastructure issue. The market says demand is dropping, and then it sells. That is the bubble mechanism. Not a bubble in AI technology. The technology is absolutely real. But a bubble in stock prices built on the assumption that installations would scale linearly. And that assumption is already cracking. ITIF reported that new data center deals fell over 40% between Q3 and Q4 of 2025. Even OpenAI's $500 billion Stargate project in Texas appears to have stalled due to partner disputes. The gap between what's announced and what's actually being built is widening. And when Nvidia or Samsung misses guidance even slightly, the market reaction is going to be violent. That's not the end of AI. That's your entry point. So where does the money actually go from here? 1. Power infrastructure. If data centers are bottlenecked by electricity, the companies building the power backbone win. Transformer manufacturers, grid upgrade companies, battery storage. These are the unsexy gatekeepers of the entire AI economy. Nobody makes a thumbnail about switchgear. That's exactly why it's undervalued. 2. Memory is different from GPU. Here's something important. Samsung and skhynix both warned in late April 2026 that memory shortages will continue at least through 2027. Customers are prepaying years in advance. Microsoft, Google, Amazon are reportedly planning to directly invest in skhynix just to lock in future supply. The data center construction delay doesn't kill memory demand, it defers it. And when those delayed data centers finally come online in waves, each wave creates a massive burst of memory orders, all at once. That's a very different risk profile from GPU makers. 3. Wait for the correction. If you're heavy in Nvidia or pure AI chip plays right now, the smart move isn't to panic sell, it's to be ready. Here's the thing about corrections like this, they don't announce themselves. They feel like the end of the world when they're actually just the market catching up to physical reality. Nvidia reports earnings on May 20th. If management guidance comes in softer than expected, or if they say anything about delayed installations, watch what happens to the stock in the next 48 hours. That reaction, that fear, is your window. Because the underlying demand hasn't gone anywhere. The transformers will eventually get built, the data centers will eventually come online, the GPU will eventually get installed. The AI story isn't broken. The timeline just got longer, and patient money always beats panicked money. Here's the truth. There is a $725 billion tsunami of announced AI spending in 2026, and right now, most of it is physically frozen at a substation waiting for a transformer that won't arrive for 3 more years. The AI revolution is real. The demand is real. But there is a gap between the future that's been announced and the physical present that can actually deliver it. That gap is exactly where smart money is quietly repositioning. Now you see it too. If this gave you a new way to look at your AI positions, hit that like button. It genuinely helps more people find this. And subscribe because this is exactly the kind of money flow most financial media never covers. I'll see you in the next one.